The changing political and economic situation in Europe has made for a volatile period in the FX markets, but that could be due to increase, according to an article in the FT today. They report that many investors are closing their books for the year early, which is leading to a fall in volume that could further increase volatility. To talk about this, I'm joined by Ashraf Laidi, who formed Intermarket strategy this year after 5 years as chief market strategist at CMC Markets and is one of the most respected currency strategists. Ashraf, thanks very much for joining Dukascopy TV again. Is this article suggesting anything different is happening to the usual dip in volume seen in the FX markets at the end of the year?
Yes, I think it makes sense. It's accurate to say that the thinning of the volumes is happening a little earlier than than usual, which is end of November instead of mid-December. It is sufficiently significant to mention that the recurring confusion and lack of direction regarding the euro and the predominant inaccurate calls of the euro by the major banks has been behind many of their decisions to wrap up their books 2 weeks early. I would say, considering that volatility, and that is price volatility and news volatility, will likely ensue until the end of the year, in the winter break, just as it did during the summer break. It is making sense for these, for these big liquidity producing players to stand pat and to take a break.
And what are the main reasons for the dips in volume that we're seeing? Are they due mainly to the performance of the euro, or the constant headlines we're seeing, or currency intervention?
The relative outperformance or the relative resiliency of the euro is one of the signs of what is the most probably overwhelming sign of such a lack of direction or confusion. A relative resiliency of the euro is to do with the relative stability in the stock markets, in global equity markets, and that is in a way a question mark, while at the same time, people are talking about looming defaults and everything. One of the main reasons that the euro is, the reason that it was not falling so fast towards 120s, as many people expected, as I expected, was because it was part of the reasons was that the German consumer, the German economy was holding relatively well, and the northern part of the eurozone were holding well. So people were basically excessively paying attention to the pigs, and were actually not paying attention enough to the eurozone, to the northern Europe, and especially to Germany, which does take a relative decent share of the euro. The news volatility is that every other week we have a new summit. And we have, we have a summit that ends up being producing nothing, ends up extending and delaying the decision until the next 2 weeks. And then you have the rate cuts and from China and some signs of a slowdown of China. All these are what you call price and news volatility. And these are the reasons that I've cited, that people are throwing the towel and saying, okay, we're just going to close the books right now, and we're just going to put the skeleton staff right now.
Finally, Ashraf, what will the impact be of the falling volumes for FX traders? Will there be a continued increase in volatility, for example?
I think they will likely continue to see some things that may not be necessarily explained by the typical fundamental backdrop. Okay, so we're going to see moves that are not going to be explained. I mean, we may see probably a protracted rally in equities and at the expense of the dollar and the yen, and we could see probably the euro holding up a little bit more, maybe courtesy of the Santa rally. But this thing could change on a dime. I mean, it could change in the next 2 or 3 days. So there is going to be a lot of volatility. And when I mean this thing, I mean that the euro could quickly drop 2 cents or 3 cents in a single day, even though the stock market hasn't really dropped like we saw last Friday. Actually, last Friday was a case in point. The euro dropped almost 150 pips or 200 pips, but the stock market held up well. So there is a lot of definitely this volatility is going to be here. News volatility, price volatility. Yes, thin liquidity. I'm sure it's going to continue. It's going to remain to be thin for the reasons that I've cited.
Thank you very much for that, Ashraf. Stay tuned to Dukascopy TV for more FX-related insight and analysis, with interviews this week, as well as currency forecasts explained in Targets in Focus. Goodbye.